This is my scalable capital portfolio. I'm also using the free broker. I use savings plans, so I don't need to look into the premium options that Scalable Capital offers. So at the end of the day, it's totally free for me. And you can also do the free account. In most cases, no need to start with the paid account. So here you can see the total portfolio value, how the portfolio has been performing in the 1 day, 1 week, 1 month, 1 year. And since I have started this portfolio. So let's go into the details a little bit. You can see here, I started this portfolio in round about 2021, and the portfolio went up to, let's say, a maximum profit of unrealized profit of 13,000 euros by the December 2022. But then it went from around 13,000 euros unrealized profit all the way down to 3,900 euros, which means that within a few months, there was a huge loss of around, let's say, 9,300 euros, which was again unrealized. I did not sell anything. And then within the last few days, there has been an unrealized profit of 4,000 euros. So there are many things to look into, but as you can see here, the stock market performs very differently depending on the different kinds of news. There are ups and downs, and for many beginners, it can be very overwhelming. So let me just go back to the overview and share what I'm investing in right now. I'm investing in the S&P 500 information technology sector. Then I'm investing in certain single stocks. Obviously, I know I have said that it's not recommended, but I have some experience now in the stock market. I'm obviously looking into individual stocks as well. So I have Microsoft, IBM, ExxonMobil, 3M Co, Ventum, ASML, Schneider, Sanofi, and Merck. As you can see here, certain things are in profit, certain things are in loss. Overall, as I said, my portfolio is in about 8,666 euros in profit. I'm also investing in cryptocurrencies, or to be correct, I was also investing in cryptocurrencies using Scalable Capital. Now, Scalable Capital does offer cryptocurrencies, but they do so in terms of ETPs. So these are exchange traded products, which are similar to how ETFs work. These are not pure cryptocurrencies. These are similar to stocks or ETFs, which are traded in the stock market. So this means that the profit or loss would be similar to stocks. There is one thing that cryptocurrencies are taxed differently. If you hold a cryptocurrency for more than a year, any profit is tax free. And if there is a loss, again, you cannot adjust those losses against anything else. You can only adjust those losses against profit from cryptocurrencies. But as I said, this video is not concerned with cryptocurrencies, so I won't go into the detail of cryptocurrencies here. Okay, let me just cover savings plans. A savings plan is nothing but an automated process. Let's say you want to buy ASML Holdings, which is a single stock, but you can start from a single euro up to a maximum of 5,000 euros. You can select a frequency of monthly, every 2 months, quarterly, 6 months, annually. So this means that if you are having just 1 euro, you can invest 1 euro one every month automatically. You can also select the execution date. For example, let's say you can select from the 1st, 4th, 7th. You have 9 different options, and you can select this month, next month, and the month after that. And you can set up a payment option. You can either add funds to your account manually, or you can ask the app to cut those funds automatically from your bank account. So essentially, what this does is automates your investing. You don't have to do anything. For example, in my scalable capital portfolio, I have 500 euros investment every single month. This is done automatically. I do not do anything. I just set it up and then I forget about it. Now, there's one thing that a lot of people do get confused with is this similar to a savings account or whatever? No, this is not similar to a savings account. You can change, for example, as you can see here, I can change this value from 50 to 500 euros. I can change the frequency. I can change the execution date, or I can even delete the savings plan. So it's not a hard and fast savings thing that is not equivalent to a savings account, which has less flexibility in terms of a fixed term or a modified term. This is something that a lot of beginners can take advantage of. Look into a company, look into an ETF, set up a savings plan, and let it run automatically in the background. So I have set up a single ETF, then a couple of stocks which have 50 euros running as a savings plan every month. And as I said, I have 500 euros of savings plans running automatically in the background, and I don't usually do anything. Sometimes I do look into individual stocks. I have changed my strategies, but again, it's a more complex topic which I won't be covering. So, is there any difference between the standard S&P 500 and the one that I have? Yes, it has a difference. The one that I have is the information technology sector of the S&P 500. So the S&P 500, as its name suggests, is an index that tracks 500 of the biggest companies in the United States. So if you invest in an ETF which is tracking the S&P 500, you would be investing in those 500 companies. But this is the information technology sector ETF of the S&P 500. This tracks the information technology companies within the S&P 500. So here is a document which details what this ETF does. But for simplicity's sake, as I said, it tracks around 35 of the biggest information technology sector companies within the S&P 500. Now, also, if you look into the ETF section, you can see here that I have searched for the S&P 500, right? So you can see there are a lot of options available here. Once you select an ETF, you simply have to look in the details as well. The first one is the S&P 500 technology sector ETF, and then in the ACC. AC means accumulating ETF, which means they do not give out dividends. Any dividends that is given by the companies is reinvested within the ETF. The next option is the iShares S&P 500 accumulating. So this is an ETF which is investing in the 500 companies. The next option is DIST. This is distributing. In terms of price, you can see that this is 565 euros and this is 52 euros. Even though both of them are S&P 500 and both of them are tracking the whole ETF or the whole index. The difference in price is because they are having a different weightage in terms of tracking. So going to the next ETFs, you can see here this is just the energy sector. This is having an equal weighted accumulating. This is a hedged one. This is the top 20. There are, as I said, there are many different things. You can also look into the first name or first word that's written. So here it is iShares. iShares is a provider. SPDR is also a provider. There are other providers like iTrackers, Global X, USB, no, UBS, sorry, different providers which provide similar kinds of things. However, there are certain changes. Again, those are more technical in terms, but let me share a few things with you guys. The difference could be in terms of total expense ratio. Now, this is the fee that is paid to this company, iShares. So each time you invest or every year for this ETF, you will be paying 0.07% per annum to this company. If you buy an ETF or if you buy a mutual fund through a company, that company usually takes 5 to 10%. If you go through an in-person broker, they also have a percentage based 1, 2, or 3% per year. If you're looking into an ETF which has a total expense ratio of more than a 0.5%, it's on the expensive side. So anything below 0.5% is okay. Anything that is below 0.1% is among the good ones. So you can usually find something that is tracking an index around 0.07. There is also something that is available on Scalable Capital for 0.04%. There are also other things to look into. For example, the distributing policy. As I said, this is accumulating. Then there's the replication process, then the domicile, many other things. But as I said, those are outside the scope of this video. Let's have a look at this example, right? What we want to do is we want to buy at regular intervals and we want to keep buying. Let's say if you have set up a monthly savings plan. So you're buying at the high points in a relative small time frame, but you're also buying at a lower point as well. So at the end, we are having a net average effect, which is called the dollar cost averaging effect. We are buying at, as I said, high points, low points, and in the long term, we are generally above the average. So let me go back and share my portfolio in terms of the ETF. As you can see here, I have bought an ETF worth different amount every single month, sometimes at, let's say, 30 euros, sometimes at 31. I've also bought it at 25 euros because it is done automatically. I'm not looking into the individual dates or months. And as you can see here, I have invested 7,800 euros into it, and I have an unrealized profit of 1,400 euros. So my total buying is at 25.39 euros. As you can see here, the value for this ETF is 29.995 euros, and my average buying price is 25.39. That's why I have an unrealized gain of 18.12%. Buying date is generally not that much if you're looking at the big picture. Now, if you know something more specifically, if you have some sort of information that many people don't have, only then you can look into a specific date. Otherwise, it makes little to no difference in the long term. Can you withdraw unrealized profit? So, as the name suggests, it is unrealized profit. You can only first realize the profit. To realize that, you have to sell a small portion of your investment and then realize it and then sell it and then transfer your or withdraw your profit from your scalable capital or whichever account to your bank account. For example, let's say I have an unrealized return of 18% or 1000 something euros. I have a total of 309 shares. So if I decide to sell, let's say 100 shares, I would be realizing the profit. In terms of 100 shares, I would be having 100 and whatever profit that I have. And then I would be paying taxes if I have already crossed my tax-free allowance or Freistellungsauftrag. And if I haven't done any sales, then this profit below the 1000 euros would be tax-free. Going back to your question, you have to realize the profit and only then would you be able to transfer your funds into your bank account. If I decide to leave Germany, can I carry on investing on scalable capital? Yes and no. You can carry on investing in scalable capital only if scalable capital is available in that country. If scalable capital is not there, you cannot use this platform, but there are other options. So let's first cover scalable capital itself. It is available in many European countries. If you change your countries and scalable capital is available in that country, you can contact scalable capital and let them know that you're changing countries, but scalable capital is available there so they can update your tax information. If scalable capital is not available in that country, what you can do is first identify which country you're going into and then identify if there is a broker available in the next country or your goal country and in Germany as well. For many countries, one of the biggest brokers in the world, it's called Interactive Brokers. You can look into Interactive Brokers, which is available in Germany and most likely in the country or your destination country. You can open a Interactive Broker account here in Germany, transfer your scalable capital ETFs or whatever portfolio from scalable capital into Interactive Broker, and then let Interactive Broker know that you will be moving to X country. And obviously, if Interactive Broker is present in that X country, you can ask them to transfer your broker or depot konto from Germany to that next country. So this can be something that you can do. Should we follow any recommended investment groups? I am not a big fan of investment groups. Some groups are paid, some groups have a huge number of scammers. And even if the group is totally scam free, if you are like open to paying, obviously not bad to pay for something, but even if it's not an unpaid or whatever scam free project or a group, even then you need to know certain things about investing in order to utilize that information. Now, if you are a beginner and you don't have any knowledge on like signals or whatever, how a stock has been performing, if you haven't done any technical analysis, and someone says, okay, buy this X company, it's going to go based on their own technical analysis to, let's say, 2x, 3x, or 5x, or whatever, and then you buy that company and it doesn't perform well. They are not accountable for that recommendation. So, it's at the end of the day, you need to be having enough knowledge to follow that signal. It's a difficult question to answer, but as a beginner, I do not recommend you to follow any investment groups. At least until you have a certain amount of months or years experience and you know how the stock market is performing, how different things in the stock market work. And if you are looking into Sharia compliant stocks or ETFs, you can search for Islamic. You have these three options available if you are looking into Sharia compliant ETFs. So you have the emerging markets Islamic distributing ETF, you have the USA Islamic distributing, and then you have the MSCI World Islamic distributing. You can look into these three. And as I said, if you're not, you can also look at the non-Sharia compliant, the MSCI emerging markets, the MSCI core S&P 500 ETF, and the MSCI World regular or Islamic if you're looking into Sharia compliant ETF. In most cases, German brokers are having the stocks or ETFs which are having European domicile and most likely the Irish domicile. You don't have that many tax implications. So if you're looking into an ETF, go into the core data, look at the fund domicile. If it's European, most likely it's going to be Ireland. It's not going to have that many implications in terms of the taxes. And obviously, these are denoted in euros, so you don't have to worry about that. That's why it's for many people, it is better that they look into brokers that are within Germany, and if it's not possible, then look into European brokers. So that way you don't have to worry about, as I said, taxes and domicile, stuff like that. And as I say to everyone who is still struggling to get started, please look into different sources, check, recheck all of the information. Don't blindly believe people. You don't, even for myself, whatever I say, please look into things, check and recheck things. Sometimes things can be outdated, sometimes things can change when you're looking into something. So please do a lot of research. It's your hard earned money, but start today so that this money works for you and you don't lose that, at least against inflation. So thank you again, and I'll see you in one of my videos.